Well, as you know, tariffs have been the talk of the town for days. We're still talking about it right now. But what does this all mean for your money and your family? We want to elevate the conversation right now. Let's bring in Cathy DeWitt Dunn, financial expert and CEO of DeWitt & Dunn Financial Services. Cathy, so good to see you this morning. Analysts say this was the single largest point increase in Dow history in a day. The Dow right around, they say, where it was before tariff talks started. So do you see this pause helping to stabilize the markets, at least in the short term?
Well, I think we're going to see a lot of volatility, just as your panelist just had mentioned. And I don't know that it just depends upon whether we're really going to hold for 90 days or are we going to have some tit for tat and some other things that we're going to see that is going to probably continue to increase volatility, in my opinion.
Okay, so with that being said, during times like this, when we do see fluctuations, we've all watched the markets the last couple weeks. How do you suggest that we protect our money and really our sanity if we do see these 90-day pause get lifted?
That is such a great question. And we have a lot of my clients that I work with right now, they're not feeling the moment of panic inside of your portfolio, because I think when you look at your investments, every single asset class needs to be doing whatever it's designed to be doing in your portfolio. And you should not have all of your money, in my opinion, in the equity market. As long as you have a financial plan in place and you know what your goals and objectives are, you need to redefine maybe where you're at and maybe do some adjustments. But you definitely need to have a plan instead of just buy and hold and it's going to all work out, because that's not really a plan. And that's not going to give you the confidence to get through some of these volatile times.
Yeah, and looking at the March Consumer Price Index, that just came out. We've got the numbers. According to that report, I know you watched this closely. Consumer prices decreased 0.1% in March. That's compared with last month. It was up 2.4%, that on an annual basis. Word is there are today, this morning, at least 15 deals on the table from at least 15 countries. If they're able to strike a deal, the possibility is that the pause continues as they get some of these deals done. So with us watching that, what do you see happening with prices for the average family right now?
Well, I think everybody's really feeling inflation. Everything is very expensive. So I think for families, you're really going to have to look at your budget. You need to take a look at all the money that's coming in and what is the money going out. Also take a look at maybe cutting back on some of the services, because we're not through this yet. And we know that inflation and the inflationary numbers, things are really out of control. I mean, gas has gone up here in the last couple of months, and we've got the summer months ahead of us. All the kids are going to be out of school. We're going to spend more money. So we really need to emphasize and stay on a budget and make sure that we're living within our means and we're not taking our credit card out when the average APR is 28% on an annual basis, and throwing money on a credit card that we're going to have to pay for later.
I want to help our viewers understand some of what they're seeing, actually. When Japan started dumping some of the bonds, of course, that was a point where the president probably took a hard look at that and started to kind of pivot. And of course, in negotiations, that is expected. You have to pivot anytime you're negotiating on whatever level that is. But help people understand what that means when you see Japan doing that and how that may have played into this decision.
Well, I think that created a lot of panic in the White House, because I don't think that they anticipated that the bond market was really going to be impacted the way that it was, because people typically use bonds for fixed income. And when you start seeing those numbers change and people are dumping their bonds, that is a big red flag in the markets. And that's also the reason why we saw such volatility, because people want a place to go for safety. And if they start really dumping their bonds and getting rid of those investments, which are considered our safe investments, there's a lot more ahead of us. And we just really need to make sure that we've got a plan in place and work with a financial advisor that understands your goals and objectives, that is going to be able to carry you through, the next couple of months and also through the end of the year. Because just because we've got 90 days doesn't mean that something else couldn't come up, because we're trying to get manufacturing jobs back to the United States. And that's going to take more than just tariffs.
Yeah, absolutely. Well, Cathy, as always, thank you for giving our viewers context of what they're seeing. We appreciate your time this morning.